Following a thorough fact-finding process and the creation of a comprehensive client profile, the next steps in the insurance process include the insurance recommendation, the insurance application, underwriting by the insurer, the insurance contract, policy claims, and client service. Insurance recommendation. The first step is developing and presenting a solution to the client's needs. An agent has a duty to provide suitable recommendations that the client can understand, enabling them to make an informed decision. Key considerations for preparing an accident and sickness (ANS) insurance recommendation include the basis for the recommendation, recommendations for managing premiums, head office modifications for non-standard risks, providing quotes, documenting the recommendation, presenting complementary policies, revising the recommendation. Basis for the recommendation. The foundation of any insurance recommendation is the client profile, which details the client's goals, needs, and financial resources. The agent must compare the client's ANS needs against their current resources and existing insurance to identify any shortfalls or gaps. If gaps exist, the agent should first consider modifying existing policies with riders or changes in coverage to create a more comprehensive portfolio. Afterward, new products can be recommended to complement the existing coverage. Recommendations to manage premiums. ANS insurance can be complex and often has a higher premium than other types of insurance due to a greater likelihood of claims. If the premium is a concern, an agent may need to modify the product recommendation to manage the cost. The waiting period, benefit period, amount of benefits, and the nature of the contract can all be adjusted to fit a client's budget. Waiting period. Extending the waiting period, the time between the start of a disability and the beginning of benefit payments, is one of the most effective ways to lower premiums. For instance, changing a 60-day waiting period to 90 days could substantially reduce premiums, assuming the client has the financial resources to cover that period without income. Benefit period. Shortening the benefit period for a disability or long-term care plan reduces the total amount the insurer might pay out, thereby lowering premiums. However, agents must ensure the shorter period still meets the client's needs given the uncertainty of a disability's duration. Reduced benefits. Reducing the actual amount of benefits is considered a more drastic solution because the applied for benefit amount should be what the client needs. This should be a last resort, and the agent should first try to emphasize the importance of the recommended coverage and help the client find the necessary funds. Nature of the contract. If the premium for a recommended non-cancelable contract is too high, the agent might suggest a more affordable guaranteed renewable contract. Head office modifications for non-standard risks. Insurance companies determine premiums based on various factors, including the anticipated level of claims. They evaluate each applicant's risk level to classify them as a standard insurable risk, non-standard insurable risk, or uninsurable risk. For non-standard risks, the insurer may still accept the risk by modifying the policy in one of four ways: imposing exclusions, imposing limitations, rating the premium, or imposing a deductible on claims. Exclusions and limitations. Exclusions are conditions or activities not covered, while limitations restrict benefit amounts or periods. Both are used by insurers to limit their risk exposure for non-standard applicants. Rating the premium. A rating is a higher premium applied to a non-standard applicant to offset the increased risk of paying benefits. Suggesting deductibles. A deductible requires the insured to pay a portion of the claim before benefits begin. This is common in extended health plans and reduces the insurer's payout exposure. Providing quotes. When presenting quotes, there are two main approaches. One product solution. The agent presents only the single best solution after conducting market research. Two suitable options. The agent presents two different but suitable options, engaging the client in the decision-making process. If this approach is used, the agent should create a clear comparison, perhaps in a chart, highlighting key similarities and differences to avoid confusing the client. Documenting the recommendation. It is crucial for both the client's and agent's protection that all recommendations, whether written or verbal, are documented in the client's file. This documentation should include the rationale for the recommendation and the client's expectations. Agents should also retain background research, such as comparative quotes, to defend their due diligence if questioned later. Client expectations. Managing and documenting client expectations is as important as selecting the right product. Expectations regarding the type and amount of coverage, eligibility for non-smoker rates, health status, and cost should be addressed throughout the process. If the final policy differs significantly from the client's expectations, the agent should have the client sign a waiver acknowledging the differences. Complementary policies. Sometimes, a single policy is not enough to meet a client's needs, and a combination of policies must be recommended. For example, a business owner might need a key person disability contract for the company and a separate personal disability policy for a critical employee to ensure both the business and the employee's family are protected. Revising the recommendation. An agent's recommendation should not be a take it or leave it offer. If the client finds aspects unacceptable, e.g., too expensive, missing features, the agent has a legal and moral obligation to restructure the recommendation to be as suitable as possible while still meeting the client's needs. Insurance application. The insurance application is the foundation of the policy issuance process. It gathers information about the applicant's health, financial status, and the purpose of the insurance. Attention to detail. The agent is responsible for ensuring the application is as complete and accurate as possible. They are considered the expert and should ask every applicable question, fully and accurately recording the answers. Inaccurate or incomplete information can delay the underwriting process or, in the worst cases, lead to a denied claim due to misrepresentation. Specific aspects requiring attention include product type and coverage details. The application must specify the type of insurance, e.g., disability, critical illness, and the amount of benefits. Owner, life insured, and beneficiary. It is vital to correctly name these parties, as they may differ in business insurance situations. Premium. The quoted premium is an estimate for a standard risk, and the final premium may change based on underwriting findings, ratings, or exclusions. Riders. Optional benefits, or riders, can be added to the base coverage and have their own premiums and underwriting requirements. Naming of beneficiary. For most personal ANS policies, the owner, life insured, and beneficiary are the same person. In business cases, however, the beneficiary must be chosen carefully for both practical and tax reasons. For example, a key person policy designed to compensate a business for the loss of an employee's services should name the business as both the owner and beneficiary. Agent's contribution. The agent's role is not just to record information. They can proactively solicit information and record their own impressions, which can be critical to the underwriting process. Agent's comments. An open section on the application allows the agent to provide additional information or impressions that may be important for the underwriters, such as future income changes or observations about the client's habits. Medical questions. Agents must assist with the non-medical questionnaire, interpreting questions and helping the applicant provide detailed answers that satisfy underwriters' needs. Inspection report. The insurer may order an inspection report from a third party to investigate an applicant's lifestyle, hobbies, and habits that might impact risk. The agent has no role in ordering this report. Hazardous sports and occupations questionnaires. If an applicant engages in hazardous activities or has a risky job, they will likely be asked to complete a special questionnaire. This may result in an exclusion rider being added to the policy. Necessary documents and procedures. Applicants must provide documentation to support their health, income, or insurance needs and may need to undergo specific medical procedures. Medical exam. An exam may be required based on the applicant's age, the amount of coverage, or their medical history. Confirmation of income. For disability insurance, proof of income is essential. Coverage is typically capped at a percentage of pre-disability income, e.g., 60 to 70%. Insurers require independent verification, such as tax slips or financial statements. Replacing existing coverage. If a new policy replaces an existing one, specific procedures must be followed, including completing a comparison form to ensure the client understands the pros and cons of the change. Underwriting by insurer. Insurers assess risk through two main types of underwriting, financial and medical. Factors affecting premiums. Premium pricing is influenced by several factors. Administrative costs and expenses. Higher costs lead to higher premiums. Investment returns. Increased returns on reserves can lead to lower premiums. Lapse rates. Higher policy cancellation rates can lead to fewer claims and lower premiums. Morbidity rates. A higher rate of illness or injury in the population leads to higher premiums. Ratings and exclusions. These allow insurers to offer coverage to non-standard risks while limiting their exposure, which helps keep premiums lower for standard risks. Financial underwriting. This process verifies an applicant's income to determine the maximum amount of coverage they can receive and their ability to pay premiums long-term. This prevents anti-selection, where an insured might file a false or prolonged claim because they are financially better off on benefits than working. Medical underwriting. Insurers use several tools to medically underwrite an applicant. Attending physician statement. APS. The insurer may request reports from the applicant's personal doctor or other physicians who have treated them. The request is made directly from the head office, and the insurer bears the cost. Medical Information Bureau, MIB. The MIB is an organization that compiles coded health and application data from insurance companies. Insurers use MIB data to protect themselves against applicants who fail to disclose existing coverage or medical conditions, especially if they were previously rated or declined by another company. Applicants must sign an authorization to allow the insurer to share and solicit information with the MIB. Insurance contract. The delivery of the policy completes the contractual process. The application is the first step, and the policy issued by the insurer becomes the offer, which the client accepts with the initial premium payment. Need for prompt delivery. The underwriting process can be lengthy, but it's crucial for the agent to deliver the policy promptly. Prompt delivery is important for several reasons. Free look period. The 10-day free look period, which allows a policyholder to return the contract for a full refund, only begins upon physical delivery of the policy. Health and financial changes. There is a legal requirement that the insured's health or financial status cannot have changed between the application date and the delivery date. A longer delay increases the risk of such a change, which could void the policy. Client commitment. Prompt delivery reinforces the rationale for the coverage and ensures the client doesn't have second thoughts about the purchase. Need for agent awareness of change before delivering a policy. The agent must ask the applicant if their health or financial status has changed since the application date. If the answer is yes, the agent should not deliver the policy but instead return it to the insurer with notes on the changes for re-underwriting. Dealing with rated cases. A rated policy can be a sensitive issue for an applicant. The agent should mention the possibility of a rating during the application process if there are potential health or other issues. Explain if the rating is temporary. Gently remind the client that the need for coverage has not changed and may even be greater now due to the identified risk factors. Providing contract disclosure. The agent must explain the contract to the client, focusing on benefits, riders, key definitions of covered conditions, and exclusions. This is especially important for exclusions, which might have been added by the head office after the application was submitted, to ensure the client understands what is and is not covered. Tax treatment of premiums and benefits. Agents should discuss the possible tax implications of premiums and benefits during the recommendation process. However, they should be careful not to give definitive tax advice unless they are also a qualified tax specialist. The client should always be referred to a professional for specific tax advice. Policy feature opportunities. Many A&S policies, especially disability plans, have features that create opportunities for the agent to review and possibly modify the contract. These include Future Purchase Option, FPO, rider. This allows a policyholder to buy additional coverage at specific times with little or no medical underwriting, although financial underwriting is required. Conversion options. Many group disability plans allow a member to convert their group coverage to an individual policy without medical underwriting after leaving the group. Timing factors for ratings and exclusions. Some ratings or exclusions are subject to review and may be amended or removed if the underlying medical condition is resolved or the hazardous activity ceases. This can lead to a premium reduction and an opportunity to purchase additional coverage. Policy claims. The claims process is critical for the policyholder. The insured must be careful to provide complete, accurate, and truthful information on the claim form to avoid delays or a denial of benefits. An agent who helps a client with a claim must be careful to avoid a conflict of interest and should follow the insurer's guidelines. Requirements for a claim. The claims process typically involves several steps. The insured notifies the insurer or agent of the event. The insurer provides the appropriate claim forms. The insured completes the forms and sends them back with any necessary supplemental information. The insurer may seek further information, such as physician statements or additional exams. The insurer adjudicates the claim and either pays in part, or denies benefits. Most insurers require a claim form to be filed within 30 days, but no more than 6 months, of the event. Medical proof. A&S contracts require a medical event to have occurred before benefits are paid. The insurer will not simply take the insured's word and will require supporting medical evidence, such as a report from the attending physician. Client service. Service is a key differentiator in a competitive market. The agent is at the forefront of providing this service throughout the entire relationship. Agent service role. An agent's service role includes providing claim forms and other documents, being prompt and accurate, developing a strategy for ongoing client awareness, determining the suitability of recommendations, documenting services provided, staying in touch with the client regularly, e.g., annually or semi-annually. Importance of promptness and accuracy. Promptness and accuracy are crucial at every stage. Delays can result in an applicant not having coverage for a covered event, or a beneficiary change not being processed before a claim occurs. Inaccurate information can also put the agent at financial risk if a claim goes wrong. Ongoing awareness and documentation. Agents are responsible for proactively checking in with clients to ensure their coverage still meets their changing needs. They should encourage clients to report any significant changes in their circumstances. All service-related activities, including client contact, discussions, and actions taken, should be documented in the client file for protection and future reference. How insurers react in a pandemic. During a pandemic, insurers follow specific contractual definitions. Insured individuals should contact their advisor for clarification. Quarantine or curfew. Quarantining or complying with a curfew does not constitute an illness and is not sufficient to file a claim for disability insurance, even if it leads to a loss of income. Disability insurance. An insured with medical complications from a covered illness, e.g., COVID-19, may be covered if a physician can demonstrate they are unable to work. Business overhead expense insurance. A claim for this type of insurance due to pandemic-related complications must be supported by a physician's statement that the insured is unable to work for medical reasons. Critical illness insurance. A claim for a critical illness resulting from a pandemic complication must meet the existing contractual definitions of a covered illness. There is no COVID-19 definition. Pre-existing conditions. Insurers will consider additional claims experience related to a pandemic when underwriting new contracts. Vaccines. If a vaccination leads to a covered event, such as a stroke, the insured would be covered based on the disability from the stroke, not the vaccine itself or the illness it was meant to prevent. Long-term care insurance. For a claim to be covered, the loss of daily activities must be due to a physical disability or inability to work as defined in the contract, not simply related to a pandemic. Travel insurance. Travel insurance definitions vary. Medical emergencies, whether or not they result from a pandemic complication, are generally covered. An insurer may modify clauses and premiums during a pandemic. Death. Any type of death is covered as long as it meets the contract's clauses and exceptions. For example, a death from illness would not be covered under an accidental death clause.